Before we enter our assets into QuickBooks, we'll need to put some time into the design and the layout of the balance sheet. First, we have to define the accounts that will track our assets. Then we can put in the individual items. Let's turn to our balance sheet and look at a couple examples. I'll scroll down to the Fixed Assets section. First, notice Machinery. Machinery is a parent account that has individual subaccounts underneath. This allows me to list my equipment separately. I can then roll it over to the main category Machinery. I'm able to collapse my balance sheet, and here you'll see I see only a grouping of machinery. When I expand it, of course I can see each of the individual items. Now notice below that I have vehicles set up the same way. Let's once again collapse our balance sheet. When it's collapsed, we're only looking at the main categories for assets. And this is a second way that I can actually put the information in. Rather than listing each asset with its own account, I can choose to just lump them together. Now, whether you choose the detail method or the grouping method depends on your individual situation. Keep in mind that QuickBooks has an asset listing that will go detailed into each item. We'll talk about the asset listing in an upcoming movie. For now, let's look at the chart of accounts and let's analyze the difference between these two methods. When I open the chart of accounts, you'll notice in the Assets section, Machinery is $15,400. Keeping in line with my main numbering system, the bulldozer became $15,401. If I have another asset, say for instance a dump truck, I would then have $15,402. This allows me to put in each individual piece of machinery. When I'm looking at the balance sheet, I can roll it up to just be the first level machinery. Going down to accumulated depreciation, I have the same choice of breakdown here. In this example, notice that we have $17,401, the depreciation for a bulldozer. You'll note that the two account numbers tie together. This can be a very tedious way of entering your depreciation. Keep in mind, the more breakdown to the accounts, the more work I'll need to do when I'm actually going in to do the data entry for depreciation. It is important to keep in mind how much detail that we need to get into. Also, when setting depreciation up, do chat with your accountant. It may be that your accountant will choose to do all the depreciation schedules for you. In that instance, there may not be the need to keep as much detail within QuickBooks. What's good to note, though, is that QuickBooks allows the flexibility to go as detailed or as simple as necessary. When we close out of the chart of accounts and go back to our balance sheet, here's where we'll reflect the simplicity. Now remember, our accounting system will take on a mind of its own. It tends to grow very, very quickly. I'm a big advocate of always starting simple. My motto is, anyone can create a complicated set of books. Keeping it simple and easy to read is sometimes the hardest part.